Hi there, traders. This is Brad Gilbert with today's trading action. All right, now the Fed have come and gone. They've cut rates, but they've pretty much walked away from future rate cuts. Right? They call it a slowing of their pace, but the market is really factoring in no rate cuts. Right? This is the key to sort of understanding, how interest rate differentials work, and you can see it very clearly on the charts. The market wasn't expecting that dramatic a shift from the Fed. Right? So we've seen a bit of a panic. This is where when you see these big streaks, don't think you're missing out. Most people, it's a big streak because most companies, businesses, banks, traders have all missed this, right? No, not much liquidity, and they just nosedive. But what we can do is take advantage of this opportunity going forward, right? The dollar is now going to be strong across the board, right? So, what we're looking for is it's going to take a day or two for things to settle down, but euro should retrace, right? Looking to get in all these pairs, okay? They do not go down in a straight line. This is the knee-jerk reaction. Look for opportunities, put trades in play to get into the trend, right? The dollar up. Okay. And that's going to be, I'd say, right through to the new year, right? And you might think, wow, this is terrible. I've missed an opportunity. Well, in actual fact, with the liquidity, you may have dodged a bullet, but it's now the 19th of December. We're going to have like at least a couple of weeks of strong dollar. This trend will not last, as in this short term one. It'll come back, retrace, as I said, and then it will keep going up. So we have got some good trading opportunities coming up, and this sets us up for a nice trending markets through the Christmas New Year break, especially for those traders using Primetime Pro, which good news, we should have both MT5 and CTrader in play, and you can capture these without actually even looking at your screens. Now, just looking at the global markets, okay, the dashboard, obviously, this is a real one of those sort of funny ones, right? Look at the equity markets. Okay. So basically, no more cuts means, you know what? The gravy train for the equity markets is over for now. Massive risk off day. And we saw that obviously just on the charts. Euro, sterling, Aussie, Kiwi getting belted, the dollar rallying. Okay. And US Treasury yields a little bit higher. So, like, you can see the picture here. I just really wanted you to understand. Don't feel like you've missed out, right? Because no one got that. This is the outcome now. We can see what's happening and you can trade forward. If you sit there and stew over the fact that, oh my God, I could have made so much money, that's crap, right? So just focus on what's coming up. We've got the picture now. Okay. Yeah, sure. Would have been great to nail some of it, but this is where things line up. Now, coming into today's trading action, right? This is going to be important. The Bank of England, right? No change expected across the board. And if I just check the probabilities, okay, Bank of England, and we are at 92% no change, right? So there's no change of rates. It's been a bit of an unfortunate week. And what I say by that is we had all this UK data that if it had lined up really weak or super strong, we get this shift. But the numbers were last week, GDP, industrial production, weak, then employment strong, CPI sort of as expected. It's like we never got the data that we wanted. So keep an eye on sterling and the sterling crosses, right? This is going to be important because you know what? You look at the major pairs, you can see how big an impact the US dollar has had across the board. But today we get to have a look inside sterling and see what it's doing against other pairs. Now, I'm like you got to have a look. If you're drawing trend lines as well, you got a nice downtrend here in euro sterling. You've got really good uptrends in sterling Aussie, sterling Kiwi. Okay, we've got trending instruments here, right? Even sterling CAD. I see the yen crosses actually sort of starting to dive, but there's lots of opportunities. I would take the dollar out of the equation and then look for something clear. But understand, we're not going to get like some razzle dazzle news out of the Bank of England. They're just going to come through. They're not going to change rates and they'll say, well, we'll see how the data goes from here. So I don't expect much from this, but you want to be looking at the sterling crosses if you are, right? So you just got to keep your wits about you, understand what's going on. Now, the global markets, equity markets, it's probably going to take another day or so for this to settle down. But once that's done, right, the Fed move has been factored into the market, right? Now we start to sort of work out where things go from here. So, you know what? During the Asian day, will we see some retracement? I don't know, maybe. But you know what? This is pretty fresh, and I wouldn't be looking to sort of tangle, trying to sort of guess when these sort of short-term moves are going to reverse, right? The secret to trading is trade with the strength, trade with the weakness. Okay, sell weakness, buy strength. These things are weak. Look to sell. Don't look to buy, right? If you look to buy, you're looking for trouble. Okay. And that's the way the markets work. All right. I'm sorry I can't give you more information except for just relax. We've got a couple of weeks of good trading coming up, and that's where the cash is going to be, not in these instant flash flood moves. Okay. All right, guys. Have a good one. All the best. Cheerio.